Hi, Warriors. A downgrade by Fitch is a bitch for the bond market. Anyway, guys, I was thinking about, remember when they settled the debt deal and President Biden had a press conference, his first one, or a speech or an announcement from the Oval Office. And underneath that on the screen was financial crisis averted, when maybe it should have said delayed. So
when was this? When was this?
Right
Dale?
right after they negotiated the debt bill, Biden went on national TV, his first address from the Oval, and it said financial crisis averted, kind of like Bush's mission accomplished before all hell broke loose.
Right.
Anyway, so team, good morning, everyone. Good morning, good afternoon, good evening.
Good morning.
We can't speak to you. We can't speak to you anymore, Dale. We only speak to AAA rated countries these days.
All right. Well, I don't. I'm an F. So tell me, is this a safe haven buying in yen? Is that what's behind this pullback here, Ryan? What do you think?
It's a little bit of risk off or reaction to this news. Stocks took a little bit of a hit overnight. The dollar took a little bit of a hit, but it held where it needed to hold. Got a level 142.25. It held there. S&P that dipped. It held where it needed to. I've got a little bit of a zone from sort of 45.30 down to 45.16. It held there. Nothing's collapsed.
Moving average. Yeah,
exactly. So, right on that.
Yeah, use your 2 hour.
Yeah.
So last night's lows and a lot of things is important here, and is what you're saying. Okay.
There might be a little bit of adjustment needed to go through. If investment firms are in AAA rated stuff and they can't hold anything less, then they've got to do a bit of rebalancing. But the market reaction, does that look like you just had your rate cut from AAA? And I think we've got to be careful with the reaction early doors in your session, the US session. The market may still be making a bit of an adjustment, but if it brushes it under the rug, I can see this ripping back higher. So be careful.
So the normal reaction would be, of course, to buy gold on any kind of debt concerns, and it's up 11. So today's highs look pretty important, just like the lows in the end. Silver up 10. I don't know I think it's all dependent upon this. You want to go, Stel? Go ahead.
No, I was just going to say the market is telling us, meh, it's not really doing much. So basically, it's telling us that
that's a non-event.
In the very short term, we discussed this on the flow show earlier. In the very short term, maybe there is a little bit of a position adjustment and rebalancing because some funds or whatever they have to hold certain AAA and other non-AAA, etc. There's going to be some rebalancing. This is very short term. In the grand scheme of things, it's no big deal, at least at the moment. I want to mention 2 little pieces of data which are interesting. One, I saw this on Twitter just a few minutes ago. US interest expenses have gone up by about 50% in the past year to about 1 trillion per annum. This is obviously because yields have gone higher, and but also Yellen announced that there's going to be more debt issuance in the second half. I think the Treasury announced basically 1.85 trillion, if I'm not mistaken.
That's a bigger issue than the downgrade, isn't it?
Yes, that's a huge issue. And also, from some rough calculations, about 15 to 20% of this issuance is going to go for coupon repayments. So so basically, this is a situation which is just growing and growing and growing in terms of debt. So how does this get addressed? Who comes to the rescue? I'll give you a hint. It's 3 letters, F.E.D. There's no other way that things can keep going smoothly without the Fed stepping in and starting to buy again more.
Buy the bonds, buy these issuance because no one else wants them.
Yeah, because at these levels, even at 4% yields, there are difficulties. There's the interest expense is huge, so they're issuing more debt to cover this interest, and of course the big deficit that exists every year.
So
what
how do
happens?
rates come down in with that narrative being authentic and true?
How do rates come down? Somebody has to buy the long end, somebody has to buy the short end, somebody has to cut rates, and we know who that is,
No.
the Fed. So I think that's the end game. How long does it take? I don't know. But I
No.
really don't see a way out of this. There is a way out of this. Balance the budget, eliminate the deficit, and then you can start talking. And that's when I'm going to get bearish metals and pretty much everything, because I'm going to say, oh my God, they're actually fixing things. But as long as they're not, and there's going to be more and more debt, more and more dollars in circulation, because let's face it, they're going to be monetizing debt. How can anything go down? I know this is a very theoretical thing, and how does that help me today? It doesn't. Of course, it doesn't today. But my medium-term view is unchanged, and I really don't see any escape from this. Sorry, I've gone on for long enough. You guys can chime in if you want.
No, it's okay, buddy.
No,
So
it's interesting to hear your perspective.
yeah.
And I'm not saying that other countries are fixed, right? I think pretty much every major country is as screwed. So how does this get fixed?
Global debt crisis. Martin Armstrong calls it a sovereign debt crisis that starts in Europe, moves to Asia, and then finally washes upon the shores here. So it did start in Europe with the
Yes.
guilt crisis. Okay.
Well, it started with
most
Greece
recent.
first, right?
Well, this cycle. So
Yeah.
anyway, gold, not a great response to it. Silver either. I
No
think it's all
response.
about, I think the whole market's about the yen. As long as the yen's in an uptrend, I think we're okay. Under 138, all hell breaks loose.
Do you see that nice little Gartley there, Dale?
No, show it to me.
Okay, we'll do and we held support, really
Right.
key support today. It's interesting, and we can talk about this here in a second. Here's like the Gartley pattern reversal, right here from the 78% retracement and 142, 142.10 roughly. This is going to be like really key support. You can see how we're getting reactions as we get
prior high
close.
Yeah.
So the thing is, and I want to talk to the team about this and see what you guys said during the flow show, because a lot of people are like, oh, first thing we did in the ForexAnalytix chat room. If you go look at here's the ForexAnalytix chat room, you go to the downgrade, and I was in the middle of doing analysis. I wasn't even I was just looking at charts, and I was in the middle of doing like Ethereum or whatever I was doing. And K-Man jumped in the chat room and was like, hey, we just got downgraded, or US just got downgraded. And I was like, oh, oops, I was in the wrong chat room. There we go. And last night we started, we're like, well, when's the last time we, this has happened? And we
2011.
Yeah, we found, we're like, okay, that was 2011, wherever it is. I don't need to find it. I was just kind of showing you where we were chatting with it. Anyway, so with that being said, I have to say that this is not 2011. This is a completely different market. In 2011, we were just coming off of, a financial crisis. And we're, I would say we're in the beginning stages of the European debt crisis. So lot different market. And today stocks are very, very lofty. I mean, we are at, near all-time highs. So the market reaction function from here is going to be a whole lot different than it was in 2011. So I don't think it's a really fair comparison, of those different times. What do you guys think? What did you guys say about 2011 versus now? Or did you guys even talk about that during the flow show? Ryan, what are your thoughts here?
Yeah, we did. Just want to bring it up though quickly. We've got ADP in 6 minutes. So
okay, thank you. I'll prepare for that. Thanks.
But yeah, 2011 was 2011. This is 2023, completely different. the list of AAA rated countries has been shrinking anyway. I think there's only 10, 11 of them. So if there is any rebalancing and whatever, you know, where are you going to take your money out of you're going to take it out of the US, good trades, good yield, good earnings in the US, stick it in Liechtenstein, stick it in Luxembourg, you know. So I think it's going to be, there was a lot of headlines last night. Oh, it's going to be the same as 2011. Market's going to crater, blah, 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 blah.
Right.
Whenever I see headlines like that, I want to fade them. But you've got to respect the move and let it play out a little bit. You know, most of the room jumped in S&P shorts. I did as well. I was in bed. I popped in the chat room, got in some shorts, put a bit of dollar yen short on, been slicing and dicing that, and now we get to see what happens. But is it likely to be a big thing? Well, the market right now says no, and that's what you got to go with. Probably has just injected a little bit of uncertainty. Put the brakes on the rally in dollar yen. Put the brakes on the rally in stocks, just until the market finds out whether, you know, they can get over this hump. And if they can, I see no reason why the trend doesn't continue.
Okay, K-Man, what are your thoughts about the downgrade? You've been around a long time. You've seen, you know, downgrades from, you know, whether it's S&P or
everybody has been. Hey, good morning, Blake, Dale, and everybody.
Morning.
Everybody's been downgraded and upgraded over my career.
You're right. I mean, that's the thing, right? It's like, it's funny. We hear more about downgrades than you hear about upgrades. When upgrades happen, you're like, what? You don't even hear about it. So,
yeah, but
so talk about what your thoughts are here.
The bigger reaction, just a quick apartheid, the bigger reaction is human nature, is always much more worried when things go badly than happy when things go well.
Right.
But no, it's completely different. First of all, I mean, you look at liquidity in the global world system is probably 5 times higher than in 2011. That for one. Yeah, no, I think it's completely different. And again, what we said of the flow show, we had the reaction, which is Asian, European morning time. And just take one example, is the S&P. We went to the support and we held it. Now it's over to the US. If ever, as Ryan already mentioned, if ever big money managers, models are saying that they need to do some form of rebalancing, we will see moves. All the rest is going to be, you know, air and transitory, you know, in moves. The data are still the data. And interestingly enough, and I'm looking at the time, interestingly enough, is that Fitch downgraded with only 1 in 4 conditions for a downgrade that were met. Why did they downgrade yesterday? I mean, it's a complete mystery, actually.
Yeah, I was listening to some commentary about that, and you know, most people agree, you know, but it's not. Does it really change like anything right now? And let me also ask you guys this, and Stellies, you may have some experience in this based on your desk experience and understanding the bond markets pretty well. You know, does it really matter that you have Fitch, but let's say you did not have Moody's and you did not have S&P downgrade? Does it affect a lot of you know, portfolios, or do you need all 3, or does one enough to make certain portfolios rebalance? What are your thoughts there?
Well, I think the markets are telling us the answer. The answer is that when, like Kay said, there is apparently not enough reason for this to happen. It's only one house that's done it. The effect is very, very benign. So, I mean, theoretically, one is enough to cause trouble, but really, given the circumstances you're seeing today, what's happening? There's absolutely no reaction at all. Whatever reaction there was has been reversed.
Still, don't you think Moody's would be much more important?
Well, perhaps, yes.
That's my thoughts.
Perhaps, yeah.
And in the ForexAnalytix, or in our chat room last night, that was the one thing that I said right when it happened. I'm like, wait till you see if you start to see other houses jump on this bandwagon, quote unquote bandwagon, then you're going to start to see more of a reaction, in my opinion. And right
ADP
now,
in 10 seconds, guys.
Oh shoot! Thank you very much. Well, we'll just see the reaction right from here.
Expecting 189 from 497. Previous number was a monster. And let's see if there's a
188.
Let's see, 324.
324.
Wow.
Boom, dollar.
That's
I'll
like
cover up some dollars right now. So nice. Wow. Well, remember, if you guys want to vote on the Forex Analytix, let me go over to Twitter here. What is our right here is our tweet right here. If you guys want to vote for the well, no, not that one. I'm sorry. It's this one right here. Yep, here we go. If you want to vote for the non-farm payroll number, now's the time to do it, because I voted not so good number, and I wish I would have waited for ADP. I would have voted a better number. So this is your chance. Go ahead and vote.
And no Reiki when penny is taken.
111. Look at you guys. Are you guys fighting over 111 here?
yeah, pretty much.
Okay, I voted 189, and now I'm gonna can I change that, Ryan?
No changes.
No changes. Dang, man.
Just want to mention, Blake, that we're like 20 pips away from your first target in Aussie from yesterday. You gave out 65.5, I believe.
Yeah, 65.5 is this big. Thank you, Dale. Is this big confluence right here? It
Nice
is.
call.
Thank you. The 161% extension of this move, 78% retracement of this move, and that was an ascending trend line from here. It's a nice confluence and little freebie for all of you guys listening in. But remember, if you're in the ForexAnalytix chat room, we talk about every FX pair throughout the course of the day. One of the things that's happening tomorrow, and let's shift gears a little bit. We have the Bank of England tomorrow. So since that's going to happen before we start the F.A.C.E show, because I think it's like 23 hours from right now, roughly, if I'm not mistaken. Let me just clarify that.
Correct.
It is, right? Correct. Yeah, that's what I thought. So it's 4 o'clock in the morning here. It's 5 right now. So yeah, so 23 hours from now, a little less than that. What are you guys' thoughts going into the Bank of England? Because so let me just map out my technical picture that everybody that listens to me normally would know. False breakout of this channel should lead to a breakdown eventually. First test is going to be this channel, which comes in right at a breakout point, which also coincides with 126.80. So that would be my logical target, and it looks like we could actually reach there, ahead of the Bank of England testing there. But breaking it is a different story. That obviously we're gonna have to have a dovish Bank of England. So let's start off with you, Ryan. You have a lot of opinions about the Bank of England. What are your thoughts going into tomorrow?
It's either going to be a 25 or 50. And as I said, if it's a 25, they'll probably keep another one on the table. If it's a 50, that'll be a top. That'll be it from the Bank of England. So it all amounts to the same thing.
Do you sell it even if they do 50? Do you go, okay, well, I'm going to sell maybe a move back up to 129, let people get all hawkish and crap, and maybe readjust based on interest rate expectations, then you sell into strength? Is that what you do?
Yeah, potentially. We know they've been a reluctant hiker all the way through this, and as Kay's often pointing out, every time Bailey speaks, the pound drops. So if you do see a decent rally on the announcement, we do have a press conference because it's the monetary policy report with all the updated forecasts and whatnot.
Yeah.
So yeah, I think in the current environment where rate expectations have been drawn down, the BOE will be getting in the same boat as the ECB and the Fed. If you see a rally in the pound, that's probably something to consider hitting. I'd like to hit it in euro sterling, but my 85 is a long way away now.
Okay. All right. Well, yeah, I mean, yeah, you're talking about the euro sterling. Let's go over that really quick. I just was looking to see if the dollar completed its bull flag pattern following that data, and it has not.
The dollar's relentless. I went in, say, Monday thinking I was going to have a rally to sell, a reaction off this first break, and the only pair that gave you the opportunity really was the Aussie. Never really had much of a bounce in.
Yeah, it's going to make people chase it. People are going to end up chasing the dollar. That's the way this works, right? You get the dollar.
It's right at 102. It's right at 102 against a pretty important moving average. Let me just look here.
Yeah, we'll get
50
there.
day.
We'll come back to that, Dale. Let's finish
Okay.
off with the Bank
Sorry,
of England.
I
So
pulled
Euro
the
sterling.
Steve. I pulled the Steve.
Euro sterling. What do you make of this, Ryan?
Yeah, I mean, I
Right.
think I've been waiting for another move to 85, and I
Forget
think
it.
I've probably been a bit too greedy because it hasn't
No.
cracked through that 84, 85, 50, 45, 50 area.
Yeah,
You
higher
never know,
lows,
you
more
might get a knock.
bullish.
Yeah, you might get a knock on the Bank of England if they're hawkish, and I'll look at it then.
Yeah, it's got a nice base building here, and and this is obviously I would start looking at this if this holds, and I'm just speaking really more of like thinking out loud. I mean, this would be an inverted head and shoulder pattern eventually. So that's there. It's set up that way. If for some reason people get really downbeat on the sterling, which isn't it isn't a stretch, right? Like
No.
I know, Ryan, you say it, everything's fine. I was out at the movies last weekend. Everybody's buying popcorn and lollipops and all sorts of crap, and seeing rainbows and unicorns. But let's not ignore that you guys in the UK are probably dealing more with stagflation than almost anybody else. So if people get really downbeat on the UK in time, and I'm not talking about today or tomorrow, maybe the sterling gets really hit, moving forward. Maybe, we get to a point where Bailey says, I have to forget inflation. I have to save the economy, which could happen, right? And he gets into that mode. Next thing you know, you got the sterling really capitulating. You get the sterling back below 120, 124, 125, and the euro stays steady with the dollar. Maybe you get some big move like that. I don't know.
That'll suit me fine.
Yeah. All right. Well, then there we go. K-Man, what are your thoughts about the Bank of England as we go into tomorrow? Any ideas here?
Yeah, I actually, paradoxically, I'd rather sell a 50 BP hike because that's going to be the last one and looking like a bit of a panic move than a 25. Yeah. But yeah, I was thinking, and I've been speaking about that for about a week over the Flow Show, and I said I want to see that overshoot in sterling into the Bank of England and then sell it. And I think the market was long sterling and is already managing their books, because that's two European afternoons in a row where specifically euro sterling is moving higher. And I guess the market is already only half optimistic about the Bank of England. Yeah, I was really looking. I've been bullish and sterling for quite a while, and I think we may be close to the end. And I'm going to have a really close look on the Bank of England tomorrow. And there's a couple of currencies. The one is the euro sterling. The other one is obviously cable, to see what the dollar is doing in the meantime. But perhaps, if we start to falter, sterling yen could be an option. But it's just an option, because my yen view is still a bit different. So.
Yeah, I was just looking at this and kind of doing a little bit of drawing with you guys here. If you were watching the screen, if you go back to September of 2020, that was a really key pivot right here at 126.80. Also, big breakout point or big resistance over here in 2022. Big resistance this year, and guess what? We're 126.80 is a number we just referenced just a moment ago, which it theoretically is channel support. If you look at all these lows right across from March all the way to now, and you look across those highs, this is channel support. I mean, it just shows you how pivotal this area is. And I'm with you, Kay. I don't like chasing things lower, because then you end up getting John G'd around, and you don't want that to happen. So I don't like to chase it lower, but that doesn't mean it can't break lower. I'd rather sell a rally. Stelios, what are your thoughts about the Bank of England? Because you've probably got some ideas here.
Well, the UK inflation is still higher than the US and the EU, but with the Fed effectively stopping now. I think the Bank of England will do the same. They have another 50. Is it going to be 1 or 2, 150 or 225s? I don't know. I still want to be buying sterling on dips. So I'm the opposite of what Ryan was saying, or Kay was saying about selling cable. I want to try along at the 126.80, definitely. And I definitely also want to try I think Europound is going to the 83s, back to that zone again, and I'd love to get long there. But until then, my bias for Europound is still short, as long as bearish, as long as we're below 87.2.
Okay, so
Yeah.
can I ask you? So can I ask you a question? So, do you think the UK is in a deflationary or stagflationary environment? Low to zero to negative growth and high inflation.
Yeah.
So you want to be long the sterling in that situation?
Well, it's not very different to the Eurozone, is it?
I don't know.
It's not, and you have to try to determine what the Bank of England is going to do, right? That's what we're talking about. So the Bank of England, based on inflation and on wage inflation as well, they have an issue. They have a problem because it's still sticky. It's a lot stickier than the Eurozone and in the US. So what do they do?
But I guess my counter argument, I agree with you, by the way, with what you're saying, but my counter argument to that is, and you could, Ryan will probably have something to say about this. Bailey's been oh God, how do I say it nicely on
Idiot.
a PG-13
He's
show?
an idiot.
Wally,
He's been a wanker. Can I say that? Can I say wanker? Is wanker
That's
okay for
shocking.
a yank to say a wanker? He's been a wussy wanker, and he should have ripped rates higher like the Fed, and he didn't. So that already shows you his bias towards being a wussy, right?
We can't trade backwards. We can only trade forwards.
Okay. Anyway, so it's up for debate. We'll see, and I think it's good that we have obviously different opinions here, because that's what makes a market. All right, last thing, Dale, you wanted to talk about the dollar. Yes, the dollar is almost completing its bull flag pattern. The dollar wrecking ball is in full effect right now, and if data continues to be strong, look, we got ADP today, we got ISM tomorrow, then we got non-farm payroll on Friday, which again, if you guys haven't voted for your put your number on wherever it is, where's my Twitter, if you haven't voted for your non-farm payroll number, you make sure you do that here. Make sure you reply to this, post your reply, because you can win a free month of ForexAnalytix. We're giving away a few of those. Last month we gave away a something else too at the trader funding program, which is cool. But let's see, dollar.
Can I say one more thing, Blake?
Yeah, go ahead, please.
You said data continues to be strong. I would argue against that. Employment data looks to be strong, which means that people are going out looking for jobs and getting more jobs, low quality jobs. So that it's I would argue that you want to see a smaller percentage of your population working, because that means they don't actually need to work. Right, so it's also the quality of the jobs. It's not just the quantity, and it's the way it's reported and double and triple counting. It's a mess. Anyway, moving on.
It is a mess, but does the market care? And I know from a macro point of view, I get what you're saying. It's not overall a good, it's not a good long-term look for the U.S. jobs number, but as far as jobs picture rather, and labor market in general, but does the market really give a crap when it comes to the headline number and the way we as traders respond to it on Friday?
Oh yeah, no, absolutely, I'm with you on that.
Okay, all right. So anyway, it just it's interesting. Dollar index almost there. We might end up tagging that at the non-farm ahead of non-farm payroll. But Dale, do you think people are going to end up chasing the market here?
It's not giving people a break to buy. It
isn't, right? It isn't.
It's pretty persistent. I thought I'd have that was it. That was your chance last week, and we nailed it. That's all I could say. And if there's nothing wrong with taking partials, but when you're at an inflection point like that, you never let go of your core position, because you may think you're going to have another opportunity, and sometimes that was it for a while. So, but I would fade the pound on strength. Euro pound looks good. So
Yeah,
I actually have long-term targets of about 114 in the pound.
114 in the pound. Wow. Well,
61.8 back.
look at
61.8 back of the whole move.
All right. Well, this is there are a lot of big breakout points. I think 124.50 is going to be like kind of where the rubber meets the road. I think this is where a lot of people that have bought it on a breakout, this is where they give up. I would think.
Under 118 is the grand prize.
All right. Mandy says, went for
stops.
lunch on Saturday. 3 of the restaurants I wanted to go to closed kitchen early because no staff. The fourth one,
There you go.
when we had to wait for 1 hour because 2 people running the kitchen alone. I wonder why they don't allow refugees to work in Germany. It's that thought process is not just a German issue. That's
it's here too.
It's here too. Yeah, it's here in the US.
It's everywhere.
Yeah. Oh, wait. K-Man, wait, is K-Man still here?
Hey, where's the morality police?
What did I do? What did I do?
Man, that is not. Remember what's in the chat room. When you log into the chat room, there's a little front page that says we can't use this kind of terminology, right?
I don't know what wanker is.
Oh, you know. Oh, okay.
I'm a Yank. What is a wanker?
Oh dear.
Okay.
Commercial.
If
Go to
you guys-
commercial.
If you guys are in the ForexAnalytix chat room, K-Man is harassing me for using the term wanker,
What?
apparently. And I have no idea what it means.
I'm not harassing anyone. Dale, have a great interview. Just kick those people out, please.
Good segue. And
All
we
right,
have another
guys.
Brit. We have another
See what
Brit
happens
with
when you
us
lose one of
today.
your A's? That's what AA plus gets you these days, folks. It's disgraceful. It's an instant downgrade in standards.
Yeah,
All
you
right,
know
guys.
what,
Hey,
Fitch? It's downgrading you today, Blake.
I am
to
getting
where I'm
downgraded.
at.
I'm
You're
I'm
an
down to
F.
like
Junk bond
quadruple
status
D, like,
right now.
ratings
Junk bond.
today. Hey,
Yeah.
I just want to say thank you guys, team. I really appreciate your thoughts, especially on today. It's such a big day in the markets. Well, I mean, whether it ends up being impactful or not, we'll see. But really, your opinions and your experience does matter in these types of situations. Stelios, K-Man, Ryan, and especially you, Dale. So thank you so much for being here. And Steve's may or may not be listening in, but he's in Rhodes right now. So he kind of tunes in when he can. So I'm not trying to lean on him. Anyway, I want to thank you all for being here. I'm going to pass it over to Dale. He's got Tim, who's in the
Collins.
UK, who probably
Yeah.
has something to say about the stagflationary environment that you guys might be in. So I'll pass it over to you, Dale.
Thanks, Blake. Team, nice job. And Tim, welcome back.
Hey, buddy. Good to be back.
So a lot of talk about the UK today when I guess, some ugly Americans want to distract from the downgrade that Fitch gave US debt yesterday.
Yeah, I mean,
is that top of mind for you at all, Tim?
what, the Fitch downgrade? No, not at all.
Yeah.
Not at all. No,
Okay.
it's an absolute sideshow for me, that, mate.
Okay.
I mean, I just don't. These guys, I don't know. They sometimes I think they just want to stay relevant.
Okay.
It makes no sense to me at all.
All right, because who did it in 2011? Was it
S&P.
Moody's?
No,
S&P
Standard
did?
& Poor's. Yeah, Standard & Poor's. Yeah.
Okay, they got their ass sued.
Yeah. Oh, yeah. They
For
got themselves
doing
in big trouble. Yeah.
Yeah. I wonder what's going to happen to Fitch now. Maybe it's a short, the stock.
Yeah. Good point.
And
Good point.
anyway, so I mean, based on that precedent, it takes some, some courage to come out and say what's really happening. And
Yeah, I mean, I don't know that it does. I don't know. I mean, I think to anyone paying attention, it's been kind of obvious. No, it's not sustainable. This deficit spending isn't sustainable.
Right.
I think everyone knows that.
yeah,
But
well,
why now? Why now? Why not like a year ago? It's
I don't know. Maybe it's because there was some hubris with the fact that they were able to negotiate a debt ceiling deal without a ceiling for a few years. And they thought mission was accomplished, that they averted a financial crisis when all they did was delay it or exacerbate it.
Yeah, maybe. I do think I don't know about a crisis, but I do think there's a slowdown.
A lot of supply.
A slowdown in its way. Yeah, a lot of supply. That's really what I'm watching at the moment. That's really got my eye, the bear steepening side of things that we're
So
kind of
today
starting to see.
Yeah, so today we find out what the mix is. I'm hearing they're going to go a lot heavier bonds.
Yeah, it's just literally being released now. Actually, I'm just trying to get the
okay, there's 10-year yields pushing up.
Small increases in refunding needs. Sorry to
Thank you, mate. So so it's basically it's all pushing up, and I think the difference this time from the last refunding was obviously that they've got their rules on roughly the balance. Yeah, it was mainly bills. A lot of that was taken from the RRP, so the reverse repo, reverse repo facility. So they've got that sat there, I suppose, as a kind of slush fund, and you can kind of interchange, loosely speaking, between them. But obviously they can't just keep issuing bills. They have to issue some longer duration stuff as well. And now I think we're seeing that perhaps at the worst possible time of that supply coming into the market, when we've got Japan, who are, basically they're doing their own thing. Because the problem with the dollar strength from a foreign buyer side of things is that it takes away a lot of that yield. If you're in Japan, you've got currency risk, and the currency risk, when you hedge it away, it really brings down your yield from investing in US instruments. Like if you take the 10-year, for example, until recently, you were roughly the same if you invested in a 10-year Japanese government bond, or if you were hedged buying a US government bond. Okay, talking around about the 10-year mark. Okay, so now obviously with Japan letting their yield fly a little bit, we're up to around about 0.62% now on the 10-year, and in theory they're going to allow it to gradually move towards 1%. There's kind of that natural buyer is taken away from the US market. Or when I say taken away is too far, but mitigated. Their influence is less, it's not as attractive, which generally means that the yield needs to be higher to bring them in.
Doesn't that make the carry trade unwind that people use to buy everything?
I mean, again, when you think about it, if you can still borrow cheaply in yen, it's it's still the cheapest one. I think the problem, it's again, the unwind of the carry trade is coming, and we're starting to see some of the emerging market, I say emerging markets, really Latin America. Those central banks are starting to cut rates because the economy's slowing, inflation's lower, so they don't, rates don't need to be as high as they are in. I think it was Chile the other day. Brazil are expected to do it today as well. I think by 50 basis points, and it's just sort of that kind of things. It might be the start, just a little bit of it. And then if we get a real bout of risk off, obviously, everyone's short yen all at the same time. We've seen this movie before.
Yeah. So, last week was big in the end. The 138 level was very important.
Yeah.
Right now it doesn't look terrible. Almost looks like it's going to go for these highs.
Yeah.
With people buying their story, right? Buying the story that they're going to let, yields go up, and they have gone up a bit, but
again, I think there's a layer underneath.
That's not a bearish looking chart to me.
No, not in the slightest. Not in the slightest. Yeah. I think the thing is a lot of people thought that, okay, so as soon as it's I like to think about this in kind of like you've got your first order consequences and your second order consequences of different things. And a lot of people tend to get caught out thinking only, okay, like for example here, okay, so in Japan, they're going to basically bring, get rid of yield curve control at 0.5%, and they're going to put it at 1%. Okay, so therefore, that means that the yield differentials will narrow and the yen will rally. All right, and we saw, that got priced in advance of the event, and now here we are, and the yen after that, and the yields are rising. The yen isn't strengthening. And I think what we're seeing is, I think that's the other side of this again, of buying the US debt. So the actual yield differentials are actually widening again because you haven't got the Japanese buyer, or you're anticipating that you're not going to have the Japanese buyer to the same extent. So in actual fact, the US and Japanese yield differential, which tends to drive the currency more than pretty much any other factor, it's widening. So if that continues to happen, then I think we see dollar yen higher.
Yeah, challenging the highs. I mean, it was a confirmed high up there. And this was a failing rally from the, you know, if we want to really get macro, the 152, the intervention that the BOJ made a lot of money on this intervention. So maybe maybe
spent
we
a lot
are
of money
going,
down, spent a lot of money.
yeah, but that was, you know, don't say intervention doesn't work. I think the jawbone by the Fed helped. You know, they came out on a Friday and said, you know, rates may not go up much longer, and it actually helped. Remember that?
I do. Yeah. Lovely little coincidence, and now here we are.
I think the whole market, Tim.
Yeah.
The whole market is going to be everything. The linkage is to everything with the yen right now. That's the way it feels to me when it technically is that it is the focal point for either a continuation of risk or the unwinding of risk. And it's all going to be about the yen. Am I crazy?
I don't think you're crazy, but at the same time, I look at the yen more as a passenger of all of this. Okay, I think that essentially by the time we are going to say, okay, now's the time to be long yen, everything's pretty screwed. And until that date, whenever that time comes, which generally is going to be the time when people are rushing for longer bonds and trying to lock in the yield and just, you know, sit out of the way for a while. Then I think, that's the point when we're looking at yen coming down. Yen strengthening and the dollar yen coming down.
Is it possible that the bonds don't rally? I mean, typically you would look for bonds to rally under that circumstance, you know, like they used to.
Yeah, I think they will once it's clear that the economy is really rolling over. And I don't know. There's plenty to be worried about in the economy. And just look at the manufacturing sector. You look at the data coming out. It's not looking incredibly good, but at the same time, it's not really rolling over. You know, where are the job losses? Like, I mean, the ADP numbers, I know they're not the best, but like you look at those numbers coming through, and they're big. NFPs as well, they're well above. You know, so they're right up there around that sort of 200,000 mark every month. You know, on average.
You want to buy this chart? This is a TLT 20-year Treasury proxy. You want to?
Not yet.
Is this a bullish looking chart to you?
No, it's not a bullish looking chart at all. What would you look at on that chart that's bullish? Nothing. Absolutely nothing. And I do think that we're going to get that. You know, at the moment, the big risk for me for risk markets, ironically, is that we actually see the longer yields kind of push out. We get that some of that term premium back.
Maybe we're going to come out.
Maybe not that far. Maybe not that far. But yes, I think we can. I think the two ends are kind of. I think if you how can I sort of explain it? It kind of obviously at the moment we've got quite a deep inversion, and I don't think that we can come out of the inversion entirely with the short end staying exactly where it is. You know, without us starting to price in some cuts, because I think if we really push those yields up at a time when the economy is slowing as well, I think at some point people are going, no, this isn't sustainable. You know, going into 2024, you know, there's a lot more refinancing, a lot more going on there.
Yeah.
You know, with high yields across the curve, you know, high yields across the curve. Say, for example, you've got 5%, you know, on the 10-year, just chucking it in there, you know, and
I think that's like, possible.
Wow, that's going to kill everything, and I'm going to grab it because we're just going to die here if I don't, you know. The economy can't handle that, in my opinion.
Okay, so if we go to 4.9 into year end, it's over.
I would say so. I mean, because it raises the benchmark for everything else, Dale, as you know. It's the risk, you know, it's the benchmark risk-free asset. Obviously, ironic that it's sold off so much as it has when it's called a risk-free asset, but you know, it's the benchmark for everything else. And if you can just sit in a 10-year bond, you know, and earn say 5% yield, then it just raises that bar. It raises that bar that little bit higher for taking on the higher risk. You know, and obviously the stock market hasn't. You know, there's plenty of juice already in there. I don't know necessarily that it's going to roll over immediately, but you know, again, it's an alternative. You know, we're just always competing for capital, you know, between markets, and you look at the relative attractiveness of them all. I mean, stocks generally everywhere are pretty much, you know, they're near the highs, you know, whereas bonds are very much near the lows.
Yeah,
there's that sort of attractiveness they're entirely at different ends of the spectrum, but that doesn't mean that we're necessarily going to say, right, today's the day. You know, we're just going to flip from one to the other, because obviously it's still only 5%, and a lot of funds and investors have to try and make more than that. You know, they've all got their mandates to meet. So yeah,
Okay.
interesting times, and I do think the dollar is the one to watch above all else.
It's a wrecking ball, and it's
Yeah.
relentless.
Yeah,
You
and I
know,
think it can do a lot more.
it gave you one good correction last week to buy this dip.
Yeah.
And if you're waiting for a dip, it's not, you know, it is not accommodating people.
No, not at all.
So, and
Not
I
at
think
all.
a lot of people are trapped short the dollar because they called this the great breakdown and the end of the dollar as a reserve currency. I heard targets like 84 and, you know, all over the place. I think we're going to 108, Tim, in the dollar.
Yeah, I could totally see that. I could totally see that. I mean, again, right, you look around and you say, okay, so you know, I like to use the dollar smile a lot as a kind of as a framework, you know, and you look around and say, okay, so relatively speaking, is the US economy going to do better or worse than other economies? And you look around, you look at the UK, you look at Australia, you look at
clean
Europe.
and sturdy shirt again, right?
Again, as it always is. It's the largest economy, no matter what Fitch does. I mean, the stupid thing with the Fitch rating, just going off on a tangent there as well, is like, if the US isn't creditworthy, okay, for it, you know, and you're saying, okay, they're not as creditworthy as Germany, and naturally we get to a point where we've got to worry about the creditworthiness of the United States, then all of the other ratings are irrelevant entirely, because then none of the other economies are anywhere near the size, the scale. They haven't got the dynamism, nothing compared to the US economy. So if the US is worse than them, then it can only mean that they're kind of, I suppose, mispriced, to use a trading term. Just completely.
Okay, what do they have in Europe that would be similar to Fitch and Moody's and rating agencies? And
nothing anyone listens to, Dale.
Really? Nothing.
Well, I mean, you barely listen to, well, at least for me, I barely listen to Fitch and Moody's and all of them. So, you know, it's like when they come with their ratings, man. Because you're talking about governments, they can print their own currencies, man. How are they going to default? You know, there's risk there of obviously devaluation, but there's not a risk of default. So what's the point? Yeah. I saw someone suggest that actually Microsoft might be a better bet, you know, and it's just, you know, just different worlds, man. Different worlds.
Microsoft is topped, is one of the first ones to do so.
Yes.
So we'll see.
Very interesting.
You know, what I'm looking at, and people, you know, this to me was a poster child for AI and the huge spec rally we had.
Yeah,
I think
massive.
that Nvidia's topped. There's a 3 drive. It's tried to make new highs. Under 440, it's got problems. So I think that, you know, a lot of these things are going to do gap fills. You know, they have a lot of earnings gaps, so that's what I'm looking for.
That's a nice, I mean, that's a nice big gap down there. But yeah, I mean, I kind of find with a lot of these kind of stocks, I watch them and everything else, but I don't really find there's opportunity in them a lot of the time, just because you've got such kind of, I suppose, you know, like countervailing forces. You know, there's like, you know, you've got the AI sort of mania, if you like, on one side, and then you've got the you know, you're trying to short that and go, this is ridiculous. I just prefer in those situations, I just prefer to sit out and find something else. There's so many markets.
Like Amazon, you know, S&Ps are at new all-time highs, Apple's at new all-time highs, right?
Yep.
And you look at something like Amazon, and to me, it looks like a bear market rally, and not even close, just a retracement. So your best shorts are things that did not make new highs during this blow-off, and they could make new lows while we could just get pullbacks and the other stuff. Anyway, you don't think there's
I don't know. I kind of like Amazon in a, you know,
do you?
Yeah, we'll have to see what the earnings do, obviously. You know, and they're just down that little bit. But yeah, I mean, because you think, again, if everything goes, it's like, okay, so let's try and work through this. So if everything goes wrong, okay, shall we say, if we're worried about the future of the economy and everything else, then you start to look to the companies that can generate the highest cash flows.
Okay,
you know,
so
and Amazon is among those, you know,
like COVID.
Yeah, kind of similar to what we saw with COVID. Yeah, I mean, they're not necessarily immune to a bit of a sell-off, but I just think that they're more likely to be bought up again because they are, you know, they are sort of so integrated into the entire economy.
I'm glad I brought it up.
Yeah, so I'd look at them in that sense, definitely. And obviously, I think you actually got a lot of stocks that are lower quality that have been built up. You know, there's been a lot of short covering. It was I saw commentary both from Goldman Sachs and from JPM in the last couple of days, that's from their prime brokerage, saying that they'd seen massive amounts of short covering and sort of basically capitulation of shorts from hedge funds. So I mean, I think that kind of says a lot about where we are now. You know, that the towel has been thrown in on those shorts for a lot of them, but that doesn't necessarily mean that they're just gonna, you know, they're going to put those shorts straight back on again. It just shows that we've probably run out of fuel. Yeah, we've used that fuel up. Exactly. So now we need a bit of positivity. And I'm not saying that we're definitely gonna, you know, that we're gonna get it, but you know, I mean, just imagine, like, if you look around, if inflation sort of settles, okay, around about this kind of level, around about 4%, you know, 3 and a bit, that kind of thing, which I think is quite likely for a little while because energy prices are starting to push higher again, and you're just kind of getting that kind of push through of the you know, the base effects kind of being priced out from before. So the bar is lower, if you like, to get those sort of inflation beats. So obviously before we had the really high inflation over these last few months, like a year ago, but now they're out of the comparison.
You know, and that's what I brought up early in the week, was with all this great inflation news that we've had, why is a 10-year at 404 instead of at 330?
Yeah, exactly. And that's because it's not done yet. You know, we haven't played it out yet. You know, it's as simple as that. And, you know, and the US government is still spending. I mean, you know, they're talking about $1 trillion issuance.
Right.
You know, it's just like that's a lot of money. And that money, obviously, it finds its way back into the economy. You know, the government doesn't just take it out and park it somewhere. You know, they're doing that and they're spending into the economy. You know, they're paying their employees wages. They're, you know, spending on social security and all those kind of things. It's all going back into the economy. So, you know, I don't like a lot of things that I'm seeing, but at the same time, I just think we're stuck in this kind of uneasy equilibrium for now within markets. But where the obvious trade for me is the dollar, as long as nothing goes terribly, terribly wrong. You know, I can just keep seeing that as the cleanest shirt, you know, because again, if everything goes wrong, you favor the dollar. If everything goes right, the US economy probably outperforms everyone else. So yeah, that's kind of how I'm looking at it.
Okay, well, normally a stronger dollar depresses most other asset classes. It hasn't really gotten to stocks.
Yeah.
You have a view on metals at all, Tim?
I honestly, the metals I'm really not that great at. I generally think that metals should be lower based on the real yields, but obviously they haven't been. You know, that for me, you know, what always makes maybe I don't know.
Right.
That's what I mean. I always get stuck with the metals because it's you had that model for them in a low yield environment before, and now it's just sort of broken down. You know, it's kind of like what's more important? Is it kind of currency debasement because of inflation? Is it, you know, deficit spending? And, you know, what's more important? What's the driver? So, yeah, for me, it's just a kind of an in and out type of thing when it comes to the metals. There's no real fundamental view, just to kind of overstretch one way or the other and think, yeah, that makes sense there to go short or long.
So the dollar goes up and we have a swoosh and everything else.
I mean, potentially.
Yeah.
I mean, sometimes the dollar can go up along with the stock market.
Yeah, it's true.
It will weigh on the earnings in the future if it stays strong. But if it's if it's flows coming into stocks, into US stocks, again seen as the cleanest and the best companies, you can see inflows into the US economy. And again, with the yields higher, you know, it kind of makes sense that you'd have that as well.
Yeah. Well, Tim, you know, I get your free newsletter.
Good.
And I think that other people should do that too. So
I agree with you there, Dan. I agree with you. We try and make things understandable for people. Yeah, if you go down there to macrodesiac.com.
Okay, so here you go. There's a picture of Tim. He's a pirate, so be careful. Just
it's my spirit animal. My spirit animal there, Jack Sparrow.
And you know what I like about you, Tim? You do a lot of you're like a gumshoe. You go to all these conferences. You're on the move, seeking out what people are presenting, and then dissecting it and giving your view on it. I think it's excellent. So it's free, everybody. So you could just go to Tim's website. And Tim, I learned things from you. I really like the term that the end is a passenger instead of the train. Yeah, that's really good, nice metaphor. And thanks for giving me balance on Amazon.
Tim's a good egg, Dale. I'll speak to him a lot on the old Twitter.
All right, so you and Ryan.
Thanks, Ryan.
Couple of
likewise,
friends.
mate.
Yeah, so
Excuse me.
really, you edify people when you speak and when you come here to Face. We appreciate it, and have a great
Yeah, I mean,
summer, Tim.
it does sound like there's a bit of education needed there, though. I don't know how we're going to teach Blake about these British words. I don't know.
Oh, wait a second. Wait,
Yeah, you know, he's in detention right now.
that is like
or
that, I
breaking
guess
a
it's,
rule.
if you came to the United States and you said you start, yeah, I'm sure
Yeah.
there's a few words we could find, and I'd be like, oh, you can't say that.
There's nothing you can't say. There's nothing you can't say.
Let me test you, Tim. See if you remember this. Do you remember the first time that word appeared on US telly? It's one of those stupid facts that you retain.
Oh, mate, no, I haven't got a clue. Go on.
No.
Were you
enlighten
old
me.
enough for Miami Vice?
Yes.
Oh,
yeah,
really?
yeah.
Phil Collins starred in Miami Vice once, and he said it.
Ah,
And it was
Brilliant.
big.
Ah.
It was a big thing in the UK in the press and everything because Phil Collins said wank on American TV.
I loved him.
And no one knew what he meant. Yeah.
Anyway, instead of saying "see you, my trading warrior brothers," I'll say "see you, mate." right.
See you, mate. Cheers, Dale.
Thanks, Tim. Ryan, Blake, you're
Cheers,
a
all.
bad boy today.
Thanks, gentlemen. Thank you, Tim.
All right,
Take care,
everyone.
guys.
Team, have a great day. Everyone that was here, we'll see you tomorrow. Good hunting. Join and get in the chat room. Do it now. See you guys. Cheers.